Hello, everybody, and welcome to panel 3 of the Blockchain for Europe Summit, hosted by Crypto UK. I'm James Harris. I'm Commercial Director at Crypto Compare, a global leader in digital asset market data. I'm really excited about today's panel discussion, which is entitled Headwinds for Digital Assets in 2021. I'm surrounded by a panel of veritable rock stars and digital asset industry leaders. I have with me Maria Stankovic, who's Chief Business Development Officer at Exmo Exchange. I have Chris Donovan, who's Head of Legal at Outlier Ventures, and I have Benjamin Whitby, who is Head of Risk, Compliance and Regulatory Affairs at Credo. So a nice blend of service providers here in the UK. I have prepared some questions, but I'd like to make sure that there's some time for some audience Q&A at the end. So please do upload your questions as they occur to you on this chat, and I'll try and get around to as many as possible towards the end. So now I'd like to hand over to the panelists to introduce themselves and their companies properly. Maria, would you like to start?
Sure, thank you, James. My name is Maria Stankovic. I'm the Head of Business Development for Exmo Crypto Exchange. We are the British crypto exchange that has been on the market for more than 8 years. I consider ourselves the best bridge between fiat and crypto world. So we have more than 200 trading pairs, liquid order books, tight spreads, and SEPA, SWIFT, and different kind of payment solutions.
Thank you, Maria. And Chris?
Thanks, James. So hi, everyone. I'm Chris Donovan. I'm the Head of Legal at Outlier Ventures. We're a UK-based venture capital firm that we established in 2014. And we focus mainly on investing into early stage, so pre-seed or seed blockchain and cryptocurrency projects. And our core focus actually is our award-winning accelerator program, Basecamp. And we work with some of the highest quality projects and founders from all over the world, including here in the UK. And we help them grow and develop and get their amazing products out into the world. And to give you an idea of scale, we're hoping or anticipating to work with more than 80 projects this year.
Thank you very much, Chris. And finally, Ben.
Thank you. Good morning. So Credo is a MPC network with layer 2 technology. We allow and enable institutional clients like exchanges or brokers to be able to secure their own crypto assets and transfer those instantly between other Credo members. So that means that you can remove all of the layer 1 blockchain fees and reduce the time of settlement. And we think as we move more into a crypto native world and more assets become wrapped with these crypto asset superpowers, that type of interaction between institutional players is going to be so important going forward.
Thank you, Ben. Well, a very interesting set of panelists and companies, as you'll agree. So starting closest to home then, the UK's regulatory environment is beginning to coalesce for digital assets, for better or for worse. But Chris, to set the scene for this panel and to set up later questions, do you think you could briefly explain sort of the pillars and bodies that set the regulation pertaining to trading, investing and the safekeeping of digital assets in the UK? And what are the key constructs that companies and individuals might have to consider?
Sure, James. I mean, that's a big topic. I could probably talk for the whole duration of the panel, but I won't inflict that on everybody. But I'll keep it brief. And I think to start with the kind of the key bodies that are shaping how the UK is approaching this question, there are probably 3 main ones for everyone to be aware of and to be thinking about. And the first is the FCA, the Financial Conduct Authority, which is the UK's financial regulator. And they're concerned with protecting consumers and maintaining the integrity of the UK's financial systems. But specifically for this discussion, what they also do is set what we call the regulatory perimeter. So in other words, which activities and which products fall within the umbrella of regulation that the FCA oversees. And that is sometimes quite a controversial question. And I'll come on to that perhaps in a minute. And what they also do is they serve as the anti-money laundering and a counter-terrorist financing supervisor for UK-based crypto asset businesses. And there's a requirement, since January this year for certain types of crypto asset businesses to register with the FCA under that regime. And that has, I guess, been somewhat of a difficult process from an implementation perspective, which I'm sure a lot of our viewers will be aware of, and panelists too. And I'm sure we might come on to discussing that later, so I won't get too stuck in right now. And just to mention then the third body, which I think is relevant is HMT, so the UK Treasury, and they are essentially the finance and economic ministry within the UK government, and they set the direction of our economic policy, on a countrywide basis. And they've been actually very active, particularly this year, in undertaking consultations around potential updates to legal frameworks, particularly in relation to stable coins, and also the question of whether or not certain types of currently unregulated crypto assets should be brought within the financial promotions regime here in the UK. And then, and I realized I missed the second body, which was the Bank of England. And I hope they forgive me for forgetting them earlier. And they're obviously our central bank, and they set the monetary policy here in the UK. And they've been quite active, actually, in contributing to the discussion around stable coins and also CBDCs, so central bank digital currencies. So they're kind of the key players, but there are a whole other raft of other bodies too. People like the payments regulator. There's a whole bunch of all-party parliamentary groups, so working groups focused on, championing certain areas of our economy. And there is a new crypto and digital asset all-parliamentary working group that's being set up at the moment. There's also one for blockchain set up a couple of years ago, and also for artificial intelligence as well. But I think, as you're probably gathering, it isn't the case that there is one regulator or one body that is responsible for overseeing our space and for guiding the conversation, how these regulations are developed. It's very multifaceted, which is a testament to the ubiquity and impact of the technology, but also to the challenge of regulating the space. There are lots of different actors involved, sometimes with different priorities and different interests, and it can make for a complex implementation, right? And I think from a key considerations perspective, it's been a very busy year, I would say, in terms of more recent developments. Originally, the UK's approach had been a bit of a wait and see. So they hadn't really made any material legislative or regulatory changes to the existing frameworks. They kind of wanted to see, I guess, how the existing structures managed with these new technologies. But I think increasingly there's a realization that more clarity and more certainty is needed. So I touched upon HMT have run 2 consultations this year. The first is to potentially bring certain types of crypto assets within the scope of the financial promotions regime. And that basically means for certain types of promotions about certain types of products or assets, they need to be approved by an authorized person, so someone who is authorized directly by the FCA, before they can be disseminated widely to the public. And that's a very interesting question, and I'm sure that the panelists will have some thoughts on that. And the second is just whether or not there should be a new category of regulated assets specifically for stable coins, which is something that I think governments and regulators, not just in the UK, but in Europe and also in the US, are starting to look at very closely. And I think that's a very important question. And for us here in the UK, since 2019, we've had a bit of certainty around where that regulatory perimeter actually sits. So what's within it and what's outside it from a digital asset perspective. And we've had 3 categories, if you like, of types of tokens. So security tokens, which are kind of carry rights that are very similar to traditional investment products, shares and bonds and that sort of thing. We have e-money tokens, which are tokens that basically fall within the definition of e-money, which is a relatively limited and specific one. And then we have this kind of catch-all bucket of unregulated tokens, which captures things like exchange tokens, as they're called here in the UK. So they're kind of the household names of crypto, the likes of Bitcoin and Ethereum, and people use them to exchange value. And then we also have what everyone has probably heard of, so-called utility tokens, which serve some sort of purpose. They can be used, as goods or services within a network environment. And the question now is, do we create a new category to handle stablecoins and all of the unique challenges that they represent? The Bank of England also released a discussion paper this week, actually, which everyone I'm sure is beavering their way through, which talks about the perceived benefits, but also the potential risks that stablecoins and CBDCs can kind of present. And I think there's a very strong desire to make sure that whatever happens in the future and how this technology is adopted, that actually the public can continue to trust in these digital currencies and digital assets as much as they do, or at least perceive to do, in relation to traditional fiat currencies. So I think that's probably, I don't want to take up too much time, but I think that's probably a good overview of where we stand from a UK perspective. There's obviously, we don't operate in isolation. there are lots of international bodies and other international regulators and stuff that will also influence how we adopt and regulate policies around crypto assets. But I think one that's important to mention is the Financial Action Task Force, which I'm sure we'll come on to. And they're kind of an international watchdog, an intergovernmental body, and they make recommendations with regards to policies as to how anti-money laundering and counter-terrorist financing processes should be implemented and adopted. And I think it's also fair to say there's been quite a bit of controversy around their latest set of guidelines, or updated guidelines that came out in March this year, particularly around the definition of virtual asset service providers, which kind of sets the scope of who should be within the obligations set out within those guidelines. And I think I'll leave it there for the moment.
Thank you, Chris. That's a very comprehensive answer, which really sets the scene quite nicely. In case there is any more flesh on that bone to be added, could I just ask Maria or Ben if there's anything they'd like to add to that before we move on to the next point?
No, I'm good. I think Chris covered it all.
That's pretty complicated, I think. So really then moving on to your respective companies, I'm overwhelmed by listening to that answer, and there's a lot of considerations, and there's perhaps an element of fragmentation there and lack of cohesion across the three pillars. I'd like to really sort of better understand, like, how has this environment impacted your businesses specifically, and sort of what contingency plans have you made, if any? I think I'd like to start with Maria for this one.
Yep, thank you. As I mentioned, we are a crypto exchange, and we received the temporary status in December, this temporary registration with FCA. You probably heard that a few days ago, the FCA postponed again this status for 8 more months. So we are kind of, we are now in limbo, sort of limbo, because, you know, when we received this status, we didn't know if we should be happy because, you know, it's still a registration, or, but this, you know, temporary at the beginning, it kind of ruins all the fun. So yeah, actually what we see that we were one of the first exchanges that actually applied for this registration. So it was like last April, I believe. So we received a lot of questions from FCA. We went to the interview, our compliance officer went to the interview with FCA, and it's really hard to understand what they want, first of all, because, you know, they don't have any patent. So they do have, and they're famous for AMI licenses, but what do they want now? Nobody knows. And I believe the FCA also doesn't know, because they kind of ask a lot of different questions, and they're not even connected sometimes to each other. And you know, this is the first one, so we're still struggling, and I know that a lot of companies, they can't even get on this temp list, so we are kind of considered lucky. That's the first one. The second one is that this status basically doesn't mean anything for the banks, for example. We do have our bank accounts with Bank Freak, but if you go, for example, to the UK bank, they say that this is nothing. This is not even, of course, this is not a license, but this is not even a permanent registration. So basically, we are stuck in limbo because we still kind of have this status, and we paid a lot of effort. We paid a lot of money, we paid a lot of efforts to that, but still we don't know what to do, what to expect, and this is very frustrating for us.
Yeah, no, I can completely understand that, Maria. I think just the other day I read that actually a lot of companies have formally withdrawn from that process. I think 60 plus companies have just said, you know what, this is too hard. And you know, you see economies like Singapore that are picking up 300 plus company registration requests, which is really interesting. I mean, Ben, do you think you could sort of put this question into context for your business and how you see these issues?
Yeah, I mean, so for our business, we're a technology business. We're focused around building the tools that enable institutions to utilize their own regulatory approvals to deal with these new asset classes. We've been working really closely with the FCA. I personally have gone into the sandbox on numerous occasions with different projects previously. We went in with our MPC and our decentralized custody position and our custody network to the FCA when we first came out the gate in 2018, and they were great. They helped us think through the problem, and they gave us an informal statement that we actually couldn't use without their permission to take to anybody. So we knew that we were okay, and they knew that we were okay, but we couldn't talk to any of our clients, which was a really limiting factor. I'm absolutely devastated about where we are in the UK at the moment, if I'm perfectly honest. I think the challenges that Maria has set out is just the tip of the iceberg. You know, we've got clients and companies in the crypto space that are leaving the UK. We've also got clients and companies that are desperate to be performing crypto asset activity. So, you know, we've got a number of different EMIs in the fintech space that are great leading UK institutions that want to engage in crypto. And they just can't do that quagmire and that bog of regulatory overhead that the FCA have put on this industry. And we're a new industry, we're less than 3 years old. And I do not understand why both the HMT and the FCA have been so negative about such a blossoming economy. Really, we should be embracing it because we've got the talent, we've got the skills, and we've got the ambition in the UK. And they seem to be intent on preventing the UK from being a dominant force in this new and emerging space. And it makes me really sad.
Yeah, and it's definitely true that you're not alone in that. And I think actually I'd like to ask this question to Chris as well, because you have a different perspective. Maria and Ben, you look at it from the perspective of the service that you offer. But of course, as a VC firm, you look at many firms as investment opportunities. And of course, you have to consider things from the perspective of those firms, and you have to weigh these risks, don't you? So how do you look at this UK situation, and what are you seeing from projects and where they're located? Is that mix changing? Like, is it moving away from the Silicon Roundabout to, say, Berlin? Like, what does it look like?
Sure. Well, I think in relation to the high level question, I mean, I would echo, you know, what Maria and Ben are saying. It's very complex, and I think it is leading to a lot of difficulties for firms looking to do business in this country. And also that has a knock-on impact for talent when they're looking at, well, where would I like to set up my business? Which environments and which regulators are going to be the most welcoming and the most easy to work with and give me some certainty about timelines and processes so that I can plan my business around it. And I think that that's an area that perhaps the UK has been struggling with of late. But there is a distinction, I guess, to be drawn between the intent of regulation versus the implementation of it, right? So I think, you know, at Outlier, where we're very much pro-regulation, provided that it's proportionate and sensible and well executed. And I think the execution perhaps is something that has been extremely challenging lately, particularly with this registration regime in the FCA. As to the mix of projects, I mean, 100% we're seeing it having an impact. In two ways. So for example, you know, we work with projects that are very early stage. Sometimes it's, you know, it's two people and their dog in a garage thinking about this great vision they have and, you know, going through the process of setting up an entity and picking a jurisdiction and all of these types of questions, which we try and help them navigate through. And, you know, for them, when they're evaluating these jurisdictions, the UK, I think, has always scored highly on a lot of different metrics as to why you might want to move here and set up business here. But I think in the last 9 to 12 months, that has changed almost entirely to the point where actually I would say most projects would be avoiding the UK at the moment, particularly because of this registration complexity, but also other reasons too around the more general uncertainty and not knowing what the environment's going to be like in 6 months or a year or 2 years' time. And it just makes it really hard to plan ahead. And there are other jurisdictions that have more regulatory certainty and more effective implementation, which just appear more attractive. So I think that's one category of projects. And then the other would be projects that are actually already established in the UK, but are being forced to relocate. And that's probably even more heartbreaking because these are businesses that they want to do everything right. They want to be compliant. They are happy to work with regulators, but the compromise of doing that becomes too great a sacrifice for the business and they have no choice but to relocate. And that I think is particularly sad.
It is, and I think you'd think that looking at the bigger picture at a point where the UK is at a critical junction in terms of, you know, it desperately needs new economies to make it difficult for a new industry to establish itself. It's probably something that we probably have to, as a country, question. But it's a good segue to move on to my next question. Like Chris, you mentioned different jurisdictions perhaps that are tackling the oversight of this new asset class. I mean, Maria, we'll start with you. Like other jurisdictions in Europe or beyond that are tackling this in a constructive pro-business way?
Well, of course, we intend to stand in the UK and stay in the UK, but of course we have the plan B in case, you know, it all fall apart. First of all is Gibraltar. You've probably all heard about it, and they do have a very good crypto licensing process. So that's, as I mentioned, the UK is, you know, at the beginning because it's only crypto registration and license is much more. So they do have the compliance of the capital. They require segregated accounts. They require passing the audit, and this is like really important if you want to be to step into the traditional finance world, where you can acquire bank accounts, where you can acquire like the best rates and so forth. So basically, I guess despite the fact that we see that MEI licensing in the UK is one of the best because it's you know, it's one of the best in Europe and one of the best and you know, well trusted. But we see that we are struggling currently with crypto, and as Ben mentioned, I don't understand why. I mean, why not to speed up the process? So we probably will go to Gibraltar or maybe Singapore. Singapore is a little less interesting because of the many reasons, because of the you know, basically the fact that this is not Europe, and sometimes European banks and European traditional finance entities, they don't want this Asian regulation because they don't completely understand that. So yeah, Gibraltar is a good way for, and I know that a lot of companies that withdrew their applications with the FCA, they went to Gibraltar, and they're very friendly.
Thank you, Maria. And Ben, do you have anything to add on that point? We've mentioned Gibraltar and Singapore. Any others that come to mind?
Credo has a plan B. We're executing plan B at the moment. Makes me really sad. We've tried really hard to work within the UK framework, and it's just not viable. It's moving too slow. The challenge is that the people on the other side of the fence, they've never necessarily done a startup before. And you know, you're putting your heart and your soul into this venture. You're raising money from shareholders. That money is limited. You have a limited runway of which to try and build your idea and gain market traction before you run out of that money. And without the support of the regulatory framework and a clear authority to move in, a fast trackers, if you were, that actually would help you get that by providing great tax advice, which we've got in this country, great accounting procedures. You know, the UK lawyer framework is amazing, but they all cost a lot of money, and it's great, and it's a great academic conversation for them, and they're getting paid. But at the end of the day, your runway is going down and down and down, and it's not a bottomless, infinite pot of porridge that you can keep spooning out. And when you run out of money, you have to let your developers go, and you have to close your entity down. And certainty, as Chris was saying, is the best thing that we can get. If we had a lightweight framework that said, this is what you can do in the UK, and just come and talk to us. Tell us that you're real people with a real team, with a real idea. And we'll make sure that as long as you're talking to us and you're trying to do the best for society, you're not going to end up in prison. But right now it feels like the language that the FCA and HMT are putting on the table is putting anybody that's touching crypto assets or any kind of crypto activity into the naughty box, into the naughty step. So a great example is the amazing creativity that we've got in this country. Like the Kings of Leon issued their last album on an NFT. Did they get regulated by the FCA? If not, then they've broken the current regulation.
Right.
It says if you're making a market in crypto assets, because that definition is so broad, it's encapsulating everybody. And absolutely, the NFT could be, certainly the Kings of Leon could be held account for breaking the FCA's market regulation on crypto at this moment in time.
Yeah, it's extraordinary, really. I think the point there about precious resources and runway is probably lost on the regulatory set that maybe thinks there's more time. This is a new industry that's emerging at breakneck speed, and opportunity cost is real. You know, you've got situations whereby your competitors that are able to move more quickly because they've got their regulatory framework sussed can effectively claim the market share, which is impossible for entrants. You know, Credo's been going for ages, and we were both in the custody space together, and you're just watching these people able to move more quickly. So I completely empathize. I think we're going to have to move away from this topic now and then move more generally, and looking at the FATF travel rule framework. And it's a very interesting one for digital assets, because in some way it's perfect, in some way it's hideous. Ben, staying with you, Ben, how do you perceive this rule, and what are the implications for asset holders and service providers in crypto?
So it's a double-edged sword. You know, for us at Credo, we've got a travel solution that we think is market leading. We've developed a solution that allows institutions to meet their compliance with the travel rule and conduct all of that activity in bands. So you never conduct a trade that is out of compliance, which from an institution perspective is amazing. From a personal perspective, I think it's absolutely hideous. I don't want my personal data. You know, I've got a trusted relationship, say, with Gemini. You know, the team at Gemini are great. I've got a trusted relationship with Gemini. I've taken a personal position to say that the Gemini framework is solid, it's sound, the team is good, the GDPR requirements are good. And then they're forced to send my personal PII data to a various third party because they're making a transaction, or I'm making a transaction with that party. Now, I don't know about you, but I'm quite protective of my personal data, because when you're in crypto, you understand that your personal data is information, your private key is information, and you need to be really secure about that. So I think it's a massive step too far to travel in its current form. I totally agree with the ability to manage sanctions and manage human trafficking, especially human trafficking. The things in that space are just hideous. But most people are not on the sanctions list. Most people aren't PEPs, and most people aren't doing illicit activity. So perhaps it is a bridge too far. No, not perhaps. It's certainly a bridge too far, and there needs to be a better way of doing it from FATF, because forcing PII to be transmitted globally is just the wrong approach.
Okay, I appreciate that. And anything to add, Maria, Chris?
Yeah, maybe I just don't see this travel rule is working for crypto. First of all, because there are hundreds of independent blockchain networks and exchanges. So at the moment, we can't really understand how it's going to be working from technical side of view, so that they're not banks. So we need to share sender and recipient information effectively between all these platforms, all these hundreds, thousands of platforms. So we need to create sort of a messaging system, sort of SWIFT system of traditional banking, and it will link all the platforms and all the exchanges in different locations. But I can't really understand how it's going to be working. I mean, even now, with the biggest exchanges, we can't really agree on how to protect and how to create these white lists and black lists of, scammers, and and even now we can't really agree with the biggest, I don't know, top 25, top 30 exchanges. I can't really see how it's going to work. So I gave you already the CipherTrace example when they basically, you can't even, you can't prevent people from sending you money, for example. And that's a fantastic example how we can't really, apply theory in practice. So whenever we get BTC from a risky wallet, we don't accept it and send it back. So that's AML procedures. Right. So the CipherTrace consider every transaction that touches a risky wallet and takes down your rating. So for example, CipherTrace used to count this transaction as two risky transactions because we received this money and we send it back. So, the exchange that actually accepted this transaction, it had better rating. I mean, how come? So that was the theory, and how it works in practice. And we needed 3 or 4 months to communicate with them and to to explain that it doesn't work this way. So and it's really simple. It's nothing compared to travel rules. So I don't really understand how it's going to work.
Yeah, and that's the issue, right? We've got permissionless ways of sending money. You can't control what's coming in, and if you're then tarnished with that, and then sort of they apply a dubious rating to your own wallet, and you're a good faith actor, you've sent it straight back. That's a real issue that needs a little bit more attention, I think. Just conscious of time, we did start a little late, but there's I'd like to ask one more question before maybe taking an audience question, and then I'll hand over to Rob. When looking at DeFi, obviously it's de rigueur these days, and many people justifiably very excited about decentralized finance. You've got a proliferation of applications that are built on these protocols, such as Ethereum, Polkadot, and others. But they create certain friction points because these applications are effectively smart contracts or networks of smart contracts. What are the risks to these? I mean, what about the legal and litigation risks? Chris, you've probably got the broadest purview there. Could you kick off a few thoughts there?
Sure, and then I'm sure that Ben and Marie also have a lot of insight. But I guess just to keep it quick, I mean, I think smart contracts and those protocols more generally, they do pose a lot of interesting legal challenges, particularly with how they interface with the traditional legal system. So I think one example that springs to mind is, a lot of these platforms operate on a decentralized basis, as many of these networks do and are designed to do, and that's partly what makes them so powerful and interesting. But from a jurisdiction perspective, for example, it makes it hard to understand, which jurisdiction's legal system should apply to these platforms and to the transactions that are happening on them, and how should they be interpreted for the purposes of those laws, would be one example of the complexity. Another would be, from an enforcement or litigation perspective, if there's a problem within the platform or a regulator wishes to bring some sort of enforcement action, again, the jurisdiction and enforcement question becomes very complicated. Sometimes it's unclear which jurisdiction would have, the ability to actually enforce or bring a claim. And then the other question is, against whom would those claims or enforcement actions be brought? Because again, oftentimes, if these protocols are truly decentralized, there isn't really a particular entity or individual or group of individuals against whom claims like that could be brought, right? And I think more generally, you mentioned the question of smart contracts, and that's another very interesting element. There are a lot of jurisdictions have run analyses about whether or not smart contracts can even meet the basic requirements for legal contracts in certain jurisdictions. Like here in the UK, for example, it seems relatively clear that in principle anyway, it's possible that these contracts can meet those basic requirements to form something that is legally binding between two or more parties. But the question is, how nuanced can they be in practice? Traditional written contracts or off-chain contracts have a lot of nuance and subtlety that's been built up over, decades, sometimes even centuries of court interpretation and legislative overhaul and what have you, that, it's at the moment anyway, potentially difficult for pure smart contracts to replicate that and deal with all of the potential nuances. And there's also a lot of technical questions too, but I think I'll definitely defer to Ben and Maria in that department.
Thank you. And Ben, you see it on the business end, I suppose. How do you perceive these risks?
Well, so the original smart contract is a vending machine on a railway station at 2 o'clock in the morning. You put your money in at one slot and you get something out at the other end, and that's really the encapsulation of what this kind of thing is. And we've expanded that to include some of the work that Open Law have done, for example, on development of ISDA-based interest rate type swaps, type smart contracts is amazing. But really, again, from a regulatory perspective, trying to put the burden of risk onto those that have developed that smart contract is completely the wrong thing to do in terms of promoting innovation in this space. The way that we promote innovation is we say, write what you wish, deploy it to the market, and battle test it with engagement. And it's, you know, typical business rules apply. Use these tools at your own risk and understand the risks that you're taking. And they're not fraught with the same type of risks that traditional centralized financial institutions exist in. They're certainly not riskless. They carry risks like smart contract risk. You know, they carry risks of like MEV running and all sorts of other different types of things at the moment. But the people that are developing them, they don't have the type of financial background that exists in the traditional financial market space. And therefore, I think we need a totally new mindset or rating system or scoring system to allow users of these smart contracts to be able to assess and make a valid opinion whether it's safe to use them. And I've suggested to a number of different people, we develop some kind of Amazon gun rating of a smart contract, and 8,000 people have given this smart contract 5 scores, and 2 standout key figures are industry security analysis have looked and deep dived on that. And then once that's done, that should be enough. If something goes wrong, the developers of the contract, and if it's an open source contract, the developers will be very difficult to actually kind of find potentially, but they shouldn't be held accountable for the using of their tools, just in the way that phone manufacturers are not held accountable for the language that is transmitted and broadcast on the phone network. It's a really nuanced position. We need to give it a lot more time and a lot more thought before we write stuff down into legislation.
So it seems really that you're saying, well, we should create a framework where we say, look, use these at your risk stroke peril. This is a nascent industry, and things can move very quickly, but let's let the market do the heavy lifting and the sorting, so that what emerges is something that functions for everyone, right? Something that breaks and can't recover is finished in this space, and something that is able to stand all of this volatility, and endure all these attacks. It's probably something that's built to last.
Yeah, absolutely. And let's give them challenges and solutions to the problems that Maria was facing. Let's give them the ability to get a bank account, right? Let's give them the people that developed email that disrupted the post office and the mailing system. They didn't get the post office saying, well, we're not going to deliver mail to your office. We're not going to deliver all the bills that you come because you're building a competitor to our system. But that's what the banks are saying. Yeah. In the UK, we need to be able to give these innovators the space to operate and provide them the amazing services and people that we've got that have got thinking about this problem. So bank accounts, accountants, legal teams, everything in that space should just be doing crypto. What steps have you taken to kind of meet a very lightweight kind of, here I am, this is what I'm doing process. Off you go.
Great. Yeah, no, thank you. And look, Maria, to wrap up, do you have any points on that?
Oh, I absolutely love the idea, the Ben's idea about this marketplace for smart contracts. I believe this is the only way actually it can be, because with the current, with the current situation in the UK with regulation, I can't really count on, some system that is coming from up. So it's going to be like, it's going to come from people.
Yeah, I think that's right. Well, look, this is all we've had time for today. I just want to thank the panelists for such an engaging conversation. I think there's plenty of food for thought there. I'm sure there are regulators listening to this. It's a bit of a plea from business to the regulatory set to be a little pragmatic and to allow an industry that is emerging some leeway so that these things can be built. Obviously, no one wants anyone to lose their shirts, but caveat emptor as well applies. So look, thank you so much, Maria, from Exmo Exchange. Thank you, Chris, from Outlier Ventures, and Ben from Credo. It's been brilliant. And I'll now hand over to Rob. Thank you.
Thank you guys for the great panel. That was like a very important last panel, and I think a great note to conclude our 2.5-day summit. Thanks Crypto UK to organizing the third half day. I think it was a great contribution to the overall debate. We discussed a lot of issues ranging from, you know, the digital euro, European regulation, stable coins, data on blockchain AI convergence, the social impact of it, DeFi, interoperability, taxation. I think we covered a lot of ground where there's further discussions needed. And the last debate today showed that there's still a way to go. I think we made quite some strides in the last years, but there's still a way to go. And I think we as an industry have a duty to do and help regulators do the right thing. And I think it's the duty of the regulators to also open up their mind and listen and take conscious decisions about what they want to do about this. Innovation is important. Consumer protection is important. And I think we have a great opportunity by working together to achieve something that covers both and that makes Europe the perfect place to work in crypto, to be like the shining example of crypto regulation, of crypto innovation. And I think we have all the talent that we need to achieve that. I think it's now up to us, and by us I mean as all Europeans, to get this done. And I hope we have, when we do our next year's summit in 2022, a bit more positive news on what we just discussed, but I think even greater news on how the market further developed, how it's further growing, how the importance of crypto assets grew even further, how the industry delivered on the promises. And I think then we can be very optimistic about Europe as a marketplace, Europe as an opportunity, and Europe as the heart of the crypto industry. And I think that's what we should strive for. And on this note, I would like to thank everybody that joined over the last 2.5 days. You've been a great audience. We've got a lot of good questions. All the participants as well. You've done a great job. We got a lot of positive feedback, both from the regulators as well as the industry side, academics, media. So I think if we keep up with the good work, then we will all end up in a place that we can be proud of. And on this note, thank you, and hopefully see you next year. And if you haven't done that yet, please follow us on Twitter. We will keep you up to date and have hopefully then a good weekend. Thank you all. See you next year.